for joining us and for making the trip over. Can I ask, just to start things off, you described the guarantee as an insane decision. We've had Governor Honohan from the Central Bank in, and we've had Peter Nyberg, as you're aware, and they've said that these were the best of all bad decisions. In your own experience and without the benefit of hindsight, what would you have done?
Well, that's what I'm saying. We're actually saying, I think, very similar things. It ends up being an insane decision, right? It was the worst possible decision that could be made. But in the circumstances that you find yourself, if the bankers are lying to you, and if the regulators are utterly incapable of seeing reality, and on top of that are telling you that tomorrow the world ends unless you take this action, right? You're likely to take terrible actions. So I think actually our testimony is consistent.
You may have done the same thing in the same circumstance.
Well, no,
because that's what I'm asking, you know, what you do.
Personally, no, because I know banks and I wouldn't have relied on the regulators.
Okay.
Right? But
if you were a politician as opposed to an expert.
Yeah, you're not, a politician is not someone who has spent his life doing these things and knows that it's too good to be true.
Okay, for sure. When I asked Ed Kane, who we had in lately in the context of Europe's response to the crisis, he said in many ways Ireland got a hard deal from its European partners in relation to bank debt. In the subsequent reforms that we've seen, do you think that there have been sufficient reforms so far in the Eurozone to make sure that a scenario like this doesn't happen again and to counter the need for a fiscal union?
No.
No, okay. So, I mean, in terms of the likelihood of a repeat, do you think that the set of parameters that currently exist make it quite likely that it'll all happen again?
Yes, and it will be worse. So what I mean is there has been such, and this is not just Ireland or Europe, this is the United States. There has been no accountability for the bankers and no accountability actually really for the regulators. So it will take the next boom before this happens again. But with no accountability and the fact that so in the savings and loan crisis, as you heard, we got over these 1,000 felony convictions. None of those people, to my knowledge, participated in the current crisis, precisely because they had criminal records. That's what we call specific deterrence, right? There will be no specific deterrence out of this crisis. The worst actors who know exactly how to use these 4 ingredients of the recipe that I told you are out there, and what they've learned from this crisis is it is a sure thing and not much of anything happens to you. That's really perverse incentive structures, and it's critical that you reverse that.
We heard from as I said, the Governor of the Central Bank in previous testimony and the Governor's role in the ECB's Governing Council. Do you believe this is a flawed construct in the Eurozone, where the fiduciary duties of the Governor of a state is to the bank and the institution, rather than, for want of a better expression, wearing one's nation's jersey?
Yeah, so one of the things is, and the chairman said to everyone should take off their jersey, and I never had a jersey, right? So I'm not from here. Structure matters. Creating conflicts of interest is a bad idea, but all of these structures failed. So I spend less time worrying about, is it an FSA consolidated approach, or is it from the central bank or not from the central bank, and far more, do the people in charge understand the concept? Like, you remember George Akerlof, the Nobel laureate in economics? Not understanding the concept, they were helpless to deal with it. If you don't understand the concept, what can you do? it'll happen again and you'll never even see it. So I focus on leadership. How did it work in the savings and loan crisis? It worked because the chairman of the agency listened to the people in the field, who in business school terms are closest to the facts. Actually read, and each month he got 1,000 pages. And he actually read, and he said, the people in the field are right. And then he went out and he hired the 2 people in America that had the reputation as being the toughest regulators in America, and put him in charge of our 2 worst areas.
Just very finally.
So, and that's just how you do business, right? How do you, if you're a business person, what do? You go out and hire good people.
MacSharry in for his last question.
Just a last question, and thanks very much, Chairman. Your writings, to me, would seem to suggest that Ireland took the hit for the European banking crisis.
Absolutely.
You would agree with that statement?
Absolutely.
Okay. So would you argue...
Ireland tried to bail out the German banks, basically, and that was never going to work.
Would you feel that the euro, therefore, is arguably unfit for purpose because the smaller economies on the periphery, like Ireland, which are less than 1% of the eurozone, is not fit for purpose because of that?
The euro is a disaster. It never made sense in terms of the economic literature on an optimal currency area. And my colleague, Stephanie Kelton, who is now the chief economist on the Senate Budget Committee, is one of a number of scholars who wrote this in advance, and their predictions have proven absolutely correct.
Thank you very much. Thanks.